12 months, $100 every single month. No trading, no stock picking, no financial degree, and after 12 months, this is what happened. But wait, before I show you that number, let me take you back to month 1, because this isn't just a story about money, it's a story about fear, patience, and a mistake that millions of beginners make every single day. I remember the first time I tried to learn about investing, every website was throwing jargon at me. ETFs, ISAs, SIPs, brokerage accounts, dividend yields, and everywhere I looked, someone was saying you need at least $5,000 to start investing properly. I didn't have $5,000, and honestly, I thought investing just wasn't for people like me. Whether you're in the UK, the US, or Canada, this is the lie that holds most people back. The idea that investing is only for the wealthy. So I decided to run an experiment, $100 every month for 12 months straight, no matter what the market did. No panic selling, no chasing hot stocks, just consistent, boring investing. I opened a stocks and shares ISA, which in the UK means every single penny of growth is completely tax-free. If you're in the US, that's your Roth IRA. In Canada, your TFSA. And I chose one simple investment, a global index fund tracking thousands of companies worldwide. No picking winners, no guessing, just the whole market. All right, let's go back to the beginning. Month 1, I transferred my $100. Hit confirm, got the notification, and that was it. No confetti, no dramatic moment, but something had shifted. For the first time in my life, I was an investor. My balance was already showing $98.50, down $150 on day 1. Completely normal, just market fluctuation. But I won't lie, it felt weird. Total invested $100, balance $98.50. And then came month 2, the month that tests every new investor. The market dropped 6% in a single week. My $200 total investment was now sitting at $183, a paper loss of $17. Every instinct in my body said, sell it, stop the bleeding. But I'd read something that stuck with me. The stock market has recovered from every single crash in history, every single one. So I did the hardest thing a new investor can do. Nothing, total invested $200, balance $183, paper loss minus $17. Month 3, the market started recovering. My balance crossed back over $200. I was back in profit. That feeling, seeing your balance go green for the first time, is genuinely one of the best feelings in personal finance. And I hadn't done anything. The market did the work. Total invested $300, balance $304. Month 4, honestly, nothing happened. The market moved sideways, no drama, and this is the part nobody talks about. Most of investing is just waiting. I was living my life, hanging out with friends, watching Netflix, and quietly, automatically, my money was working for me. That's passive investing, and it's more powerful than it looks. Total invested $400, balance $411. Month 5, this is when things got exciting. I'd put in $500 total. My balance said $538. $38 that I didn't earn. The market earned it for me. Now, $38. It doesn't sound like much, but psychologically, this was enormous. Because for the first time, I genuinely believed this works. Total invested $500. Balance $538. Gain plus $38. 6 months in, halfway point. $600. Put in $654 in the account. $54 in gains, completely tax-free. In the UK, inside an ISA, zero tax on any of that growth. US Roth IRA, zero tax on qualified withdrawals. Canadian TFSA, zero tax on growth. The account type matters just as much as the investment itself. Total invested $600. Balance $654. Gain plus $54. For month 7, I'll be honest with you, I started getting tempted. Friends were talking about individual stocks. Someone in a Reddit thread was bragging about 40% gains on a single trade. I looked at my slow, steady return and thought, could I do better if I picked my own stocks? But then I remembered the data. Over 10 years, more than 90% of professional fund managers fail to beat a simple index fund. These are people doing this full time. If they can't consistently beat the index, what chance does a beginner have? I closed the browser tab and stayed the course. Total invested, $700. Balance, $763. Month 8, I decided to increase my monthly contribution. But not impulsively. I sat down, looked at my budget, confirmed I had extra room, and moved my direct debit from $100 to $150 a month. This is an important distinction. Invest what you can genuinely afford. Never invest money you might need in the next 12 months. Emergency fund first, investing second. But if you have the room, increasing even by $25 or $50 a month makes a dramatic difference over total invested $850. Balance $931. Month 9, quiet, steady, uneventful, the market returned around 3% that quarter. I did nothing, just deposited and walked away. And I want to highlight this. The months where nothing dramatic happens are the months that build real wealth. Patience isn't passive, it's a strategy. Total invested $1,000. Balance $1,089. And then came month 10, the month I almost quit. The market dropped 9% in a single week. My balance went from $1,089 to $972. A paper loss of $117. This felt different from month 2. This was a bigger number, a bigger drop. And there was a very real voice in my head saying, just get out. You can get back in when things settle down. But here's what the data shows. The investors who panic and sell during crashes lock in their losses, and then they miss the recovery, which historically comes fast and comes strong. I deposited my $150 and I walked away. Total invested $1,100. Balance $972. Paper loss minus $128. Month 11, the market started recovering. And here's something interesting. The $150 I invested during month 10's dip went in at a discount. I bought more shares for the same money because prices were lower. That's a concept called pound cost averaging. By investing regularly, whether the market is up or down, you naturally buy more when prices are low and less when prices are high. It smooths out your average cost over time. Total invested $1,250. Balance $1,324. Month 12, the last deposit, I transferred my final contribution. And then I waited for the month to close. 12 months of discipline, 2 scary dips, 1 temptation to quit. 1 temptation to go rogue and pick stocks, and now the number. After 12 months of investing $100, then $150, every single month my total invested was $1,300, and my final balance was $412. Let me break that down simply. I contributed $1,300 of my own money. The market added $112. That's an 8.6% return in 12 months. The global stock market's long-term historical average is around 7 to 10% annually. I was right on track. Now $112 feels small, I get it. But this is where you need to think long-term. If I continue investing just $150 a month, in 10 years approximately $26,000. In 20 years approximately $78,000. In 30 years approximately $182,000. Over 30 years I would have personally contributed around $54,000. The market would have added roughly $128,000 on top. That extra $128,000? I never worked a single day for it. That is the power of compound growth. And the earlier you start, the bigger that snowball becomes. Here are the 3 things I wish someone had told me before I made my very first investment. Lesson number 1. The amount doesn't matter. The habit does. Most people wait until they have enough to invest. There will never be enough. That's the trap. Start small. Build the habit. Then increase the amount as your income grows. The habit is the foundation. Everything else builds on top of it. Lesson number 2. The dips are not the enemy. Panic is. Every market crash in history has been followed by a recovery. Every single one. The investors who held through those crashes are sitting on incredible gains today. The investors who panicked sold locked in their losses and missed the rebound. When the market drops, don't sell. If you can, buy more. Lesson number 3. Use the right account from day one. This is the mistake I see most beginners make. They invest, but in the wrong type of account. And then they hand a chunk of their gains to the taxman every year. Fill your tax-advantaged accounts first. Every penny of growth inside them is yours to keep. So that was the experiment. 12 months, $1,300. Invested, $1,412. Returned, $112. Earned without lifting a finger. Does $112 change your life? No, but the habit, the proof, the system working, that changes everything. Because in year 2, it's more. In year 5, it's more. In year 10, the number genuinely surprises you. You don't need $1,000. Start. You don't need a financial advisor. You need a small amount of money, a phone, and about 15 minutes. In my next video, I'll walk you through exactly which platform I use, how to set up your account step by step, and how to make your first investment in under 10 minutes. Hit subscribe so you don't miss it. And drop a comment below. Are you already investing? Or are you just starting out? I read every single one.